Because once the reality of this stop loss being 10 grand and your targets being 50 grand, and you see now that you're in 10 grand profit, I'm telling you, you're not holding for much longer than that. Because some of you don't even see 10 grand in 6 months, let alone 10 grand in one trade. What's going on, traders? Welcome back to my YouTube channel for another episode of How to Trust the Process. On a serious note, today I'm going to talk to you about a really serious matter here. And the reason why I decided to raise it is because I'm getting a lot of questions regarding how you can overcome it. And I honestly believe that this is or will be one of the major changes to potentially your trading for the future. And I say that with all seriousness, no clickbait here. Click dislike if you don't like what you're going to see. But honestly, I really do believe just this one simple advice I'm going to give you is going to help you change your trading forever, because there are so many different strategies out there, traders. And some of you adopt this strategy and that strategy. You go to this strategy for that mentor or this person or whatever it may be. But ultimately, they all work. But the number one thing that's going to help you to get through the hard days, the slow days, the drawdown when you take 2 or 3 losses in a row is ultimately going to be this. And my arm is twisted like this because my arm's hurting like this, your mind, okay? And if you can't get that right, your mind, meaning your thought process, if you can't get that right, then it's game over. So I'm going to discuss something with you. I'm not so much going to show you a strategy. You probably already know this, but I'm going to shed some light on it to give you a different perspective. And as I said in the beginning, and I mean this is not clickbait. I really do believe that this is going to shape and or change a lot for a lot of you. And the most important thing, remember, as a trader, your ultimate aim is to make money. So if you're new to the channel, welcome. Subscribe if you're not subscribed already. Hit that like button for me, traders, if you like the video, and turn on notifications for when I next post another YouTube. But for now, let's get on to the topic. So I want to discuss with you today your risk management. Now, not so much how to do risk management. That will come because, again, I've had requests for that. So I'll do that in maybe, a week or two. But the most important thing for what you're going to need to apply after you watch this, tomorrow, Thursday, Friday, as you're going into the weekend, is the thought process behind where to place your stop loss. Now, a lot of traders, when using their stop loss, like to have the smallest of stop loss. And the reason for that is they think that the smaller the stop loss that they have, the bigger the targets that they can go for, meaning the more money they can make. Now, you wouldn't be wrong if you said that, but ultimately you've got to get to a stage in your trading when you realize that doing what you've been doing up until now is not working. And in order to make a shift and change in your progress and in your results, you need to do the opposite, or at least do a different variant to what you're currently doing. Because ultimately, if you keep doing the same thing over and over again, you're not going to get results. Now, the problem is with smaller stop losses is that, granted, your risk reward ratio does increase because you're able to take advantage of more ranges in the market. The disadvantage is more often than not, a lot of you are stopped out before the market goes in your direction. Now, is there a way to avoid this? 100%. Is there a 100% way to avoid losses? No. But what you can do is position yourself as a trader whereby the only time you lose trades is when you are 100% wrong. Not because you decided to cheat the market, or you decided to have a smaller stop loss, and or you decided to get bigger risk to reward. Because I'm going to be brutally honest with you. Social media has glorified bigger risk to rewards. Nowadays, it's all about who can get in at the top, who can get the biggest risk to reward with the smallest stop loss. Because whoever does, in theory, makes the most amount of money. But I just want to tell you now, it is a load of BS. And when you're risking 10 grand in this single trade, meaning this stop loss is your 10 grand, and you're going for 50 grand, this is not how you're going to be trading, my friends. And I can bet my life on it. And anybody who tells me, yes, if I was risking 10 grand to make 50 grand, I would do it because it's better risk to reward and I make more money. I'm just going to tell you now. One, you're a donut, and two, you've probably never even made £100 in your life, and that's why you're saying it. Because once the reality of this stop loss being 10 grand and your targets being 50 grand, and you see now that you're in 10 grand profit, I'm telling you, you're not holding for much longer than that. Because some of you don't even see 10 grand in 6 months, let alone 10 grand in one trade. So the point here is this: if you identify that the market structure is down, the behavior is down, the confluences are down, and you're going to take a sell, would you really be risking 10 grand in this small stop loss to go for 10 grand? Or actually, no, go for 50 grand? Probably wouldn't. Now, again, there's going to be some in the comments that are going to debate this, and I know the lot that are. I ain't got time for you. The point is this: you have to really put things into perspective. If it's not working or hasn't been working up until now, then you need to change things, because I much prefer to be 100% guaranteed, or almost guaranteed, let's say 99.9% guaranteed, the market's going to go down. I have the behavior that supports it and the confluences, and have a stop loss here, risking 10 grand, and go for a 1-to-1 and make 10 grand, than risk jumping into the markets and being stopped out before the markets go down. And then that means I lose 10 grand and have to risk another 10 grand. Doesn't work like that, my friends. Doesn't work like that. And this week has been a fine example of that. It's been a great start to the week. Monday called out euro yen buys. You'll see it here. Actually, let me share this with you. So yeah, I've brought you to the screen. As you can see here, on Monday, we called out euro yen buys, and you'll see the trade here. It was a really nice buying opportunity. I did suffer some drawdown here, but it just is what it is. And then there were some really great trades that were taken as part of this one here. Oh, here we go. Here are some of the winners. Anyway, besides the point. And then today we called out pound USD buys, and as you can see here is the winning trade. And then we have some winners over here. Now, the point I'm trying to make here is this: yesterday's trade, the stop loss placement, I mean, this looks small, but I'll share the trade over here with you on TradingView in a minute, was fairly decent. And then you can see here on pound USD, the stop loss placement is big. Now, let's go back over to the charts. You have to understand something here, right? Your stop loss placement should be decided on a couple of things, and I'm going to share this thought process with you for you to have to think about, okay? The first thing is this: if the market structure is pushing to the downside and you decide to take a sell, there are 3 areas in the market where you're going to be placing your stop loss. Let's copy this over. 1 and 2. Okay. The first area that you're going to be looking to place your stop loss is above the lower high / retest level in the market. So this is this one here, right? So this is a retest level, and this is the low high. The next area in the market where you're going to be looking to place your stop loss is, let's just say this was the momentum shift. And then you have a continuation. So you're looking to take the breakout now. Here is going to be above your entry candle. And then the final area you're going to be looking to place your stop loss is above the previous high. Now, for most traders, they're either going to place their stop loss above the previous retest level, lower high, or higher low, and or above the previous candle, because your risk to reward ratio is much bigger here. Whereas most traders would avoid at all costs putting their stop loss above the previous high, simply because the risk to reward ratio is off. But now listen to this. Most of the traders that you're watching or admiring too, because they're taking the biggest risk to rewards, are traders that are risking 0.01, 0.1, 0.5, or even a single lot, and they're needing to capitalize on their reward. Now, let me make this very clear. There is absolutely nothing wrong with that. And if that's how you want to trade, it's completely fine. However, traders that think they're going to move forward with their challenges and get funded by risking 1,000, 2,000 to then gain 20,000 or 10,000. That is unrealistic and that is really stupid. If you're building a small account and this is how you have to do it, fair enough. But in terms of moving forward and progressing as a trader, this is not how you're going to do it. Especially when you do get funded now and you have 4 accounts, your 1% risk now becomes 4K and then your target in 12K. Most of you won't even hold it past 1K profit, even though you've just risked 4K. Some of you will. The point is this: you're here to make money. If you're risking now 4K to make 4K, there is a big difference. Most people would prefer to have a safer stop loss than to go for the greed factor of putting it behind the previous candle and or going for a bigger risk reward ratio because they want the best entry and the best reward. Just something to think about. As I said, when the reality dawns on you, when you do start to progress, because at the moment, most of you are where you're at, but when you do start to progress, the reality will start to dawn on you and you'll start to rethink some of the things that you're doing. Now, in the beginning, if you initially need to risk less to gain more, that's understandable, but a smart trader will work smarter and not harder, meaning in order to make more money, you have more capital. And that is where you want your focus. Not trying to get a sniper entry and or trying to get the biggest risk to reward and placing your stop loss in places where the price can stop you out and then eventually go in your direction. For the majority of you, you know where the market's going. You understand that through the structure, through the behavior, through the correlation. Then all you need to do is make sure you tuck that stop loss away so that you can gain your rewards. Because some of you are losing confidence because you're seeing the market go in your direction, then stopping you out, or stopping you out, then going in your direction. Whereas if you were just settling for, not saying a one-to-one risk to reward, but you're settling for profits as opposed to trying to be too greedy or too smart, you will find that you boost the confidence, which in turn will build your faith, in turn naturally will give you better results in the long run. So now, what determines your risk to reward? Well, of course, whether you place it above the key level, above the previous candle, and or above the previous high. Most will opt out of this. But listen to this. If the market structure decides to change the structures and you start to have smaller retests or lower highs, or the structure starts to form better structures, then look what happens. Naturally, your risk to reward gets better. But at the same time, you're not jeopardizing your safest stop loss, because as you can clearly see here, it's still above the previous high. And I will share an example of that with you in a second. So traders, here we're at the example, and we're going to be looking at CAD JPY. Now, I just want to let you know I'm in a different t-shirt because it is actually a new day. I had to finish recording off, unfortunately, because something's happened in my family and I had to leave the recording yesterday. But I'm back today to complete it for you and finish this lesson. So I decided to take this example here on the 5-minute time frame on CAD JPY. And I'm sure for the most of us, we can look at this and agree the trend of the market is down. Price has just recently broke a structural low. We have a really nice retest and a momentum shift here. Now, if the confluences are not lining up to take the sell, then I honestly don't know what is at this stage. But we're taking this trade. Now, remember what I said. What we're looking for here is to make sure that we have the safest stop loss possible so we can go for a decent enough risk reward ratio and obviously capitalize and make some money. Now, for the majority of traders, this is where they're putting a stop loss above the key level and or what they perceive to be the lower high. That's really strange, that, isn't it? Okay, which is here or here, whatever you want to call it. Now, remember what we spoke about here in this example, and I'm going to use pounds because I'm from the UK, obviously. And that's our £10,000 risk for our £30,000 gain, because we're going from 1 to 3. So this is what you're going to be doing in the future. Remember, traders, maybe not now, but in the future, when you eventually increase your capital and you go for, I mean, you just have bigger capital. You know, you're going for the big bucks. This is what it's going to look like. Now, during this stage, you're trusting that price should trade below this level. If only when it breaks this level is a trade invalid. And the reason why you want a smaller stop loss is because you want to target bigger risk to rewards. This is the theory, right? So this is how you place the trade. You go into this trade based on the fact that price is trending down, making lower lows and lower highs. Price is at a key level in the market of resistance. You have a momentum shift below the previous level here. So just to illustrate that, we've just broken below, so a strong momentum candle. And there's just no way in the back of your mind that price could ever pull back to this level. Now, you obviously accept that price can stop you out, but at this stage, you're so pumped and amped to risk your 10,000 to make 30,000. And this is where you're going to place your stop loss. This is what the most traders do, right? Again, it's not wrong. If this is how you want to trade, it's fine, but you have to think about this. So, let's put that back, right? There's your 10,000. Let's remove some of these here. Whatever the case, whatever, don't matter. Let's skip it forward. Price starts to go in your direction, it pulls you back, and then what happens? Eventually get stopped out. Now, for the most part, traders are now jumping into the markets again, and they're looking to enter the trade here because now price is broken back into the level, and they're looking to take the trade back up to the highs. Again, trying to maximize their risk to reward here, so they put their stop loss below. Take the trade. What happens? You lose that one. Anybody be in this situation? I'm laughing because I guess, I don't know, it's kind of funny. It just is what it is, I guess. But this is the scenario that most traders are finding themselves in. Now, I just want to make it clear, again, that it's not wrong to put your stop loss there because in theory, the key level should be respected. It's a retest level. You've got momentum candles. Price should go down. But listen, you really going to be risking your 10 grand like this? This is how you're going to be risking your 10 grand? I don't think so somehow. This is not what you're going to do, my friends. The reason why you do most of what you're doing now is because you're trying to build smaller accounts and or you're trying to pass your challenges in a week. Now, let's play this scenario out again. If we're the kind of trader that understands that the trend of the market is going to continue bearish, the structure is down, price is making lower lows and lower highs, price has just broken the previous level, and we have the momentum shift, we are confident the market's going to go down. What we can do is place our stop loss behind the previous structural lower high, where as long as price trades below this level, we will continue down based on this being the double top if price comes back to it, allowing price to breathe. We're now risking 10,000, and in this scenario, we're making 13,000. Granted, it's not as much as the 30,000 that we were anticipating, but guess what happens? We have a much safer stop loss. We understand the trend is down. The risk to reward ratio at this moment in time is only 1.3 to 1 because the previous level high was further away. But guess what? We risk 10,000. And in this scenario, we make our 13,000. Simple maths. And this is the mindset shift you all need to have. Because if you don't, I can promise you, every little loss you take is going to seem like the biggest loss in the world. And every decent win is going to seem like the smallest win. Get yourself into a winning trader's mindset. Focus on the process of making money. Make sure that you put yourself in a position that gives you the highest probability of winning these trades. And then just trade the numbers. Day by day, week by week, month by month. Stop trying to be the science and brains behind how the market moves and everything else. Because the longer you do that, the longer you stay here. Okay? Think about where you're at or what's got you to where you're at now. Put yourself in the present. Think about how you can change it and then see yourself in the future so you can apply it in the live markets. And that's the lesson for today. I hope you enjoyed that, traders. If you did, please hit that like button for me. Subscribe if you're new to the channel. Turn on notifications for when I post next. And until the next time, continue to trust the process.